Hi there, welcome to my real estate video blog. Thank you for being here. My name is Kodi Riddle, and I am doing this video today as a 2021 mid-year market update. Okay, thanks again for being here, and let's get after it. We are in the midst of change. Lots of change is happening in the market, in the real estate market, across the nation, and specifically here in the greater Phoenix area. Let's take a look. I'm going to share some of these slides with you. So here, this comes from the Chief Economist at First American. It looks like existing inventory is starting to inch up, which is good news for a housing market parched for more supply. And then you have this last one here from the Chief Economist at the National Association of Realtors. Supply is expected to improve, which will give buyers more options and help tamp down record high asking prices for existing homes. So great information from some people that are in the know. I feel very comfortable listening to this, but I do want to caution you that you may see as these changes occur that headlines are going to do more to terrify you than to clarify the situation. So find your trusted source. Call your realtor that's in the know, because they should be giving you information so that you can make a sound decision for yourself and for your family through good data and stats, really. So I caution you on that too. Don't let these headlines scare you as this change occurs. Okay, let's get into it. Specifically in the greater Phoenix area, this is what's happened for the year 2021. And 100, the number 100, which is way down here, is a balanced market. So we started off the year way above a balanced market, and above meaning supply is super low, demand is super high. And it had continued and it continued and it continued to go up until we hit our peak in mid-March. So you can see from here, and you haven't felt it out there in any way, but from mid-March to right now in July, it has been a steady downturn, more towards a balanced market day after day after day. So again, you haven't felt it because remember, 100 is a balanced market, and we're still, even right now, around 377. So these are just stats done by the folks at the Cromford Report, which is amazing stats that we have as real estate brokers should we invest in getting this information for ourselves to then give you the information to make a sound decision. Okay, moving on through this and knowing this information, these are my suggestions to a seller. Don't be too unrealistic on your asking price. Wait, and you're going to miss out on an extremely attractive market. Right now, it has never been a better time to sell. And price appreciation will moderate as rates and inventory rise later this year. So sellers, if you have a home to sell, do it now. I've been saying that for the past 5 months. Right? But do it now. You see where the forecast is. We're getting closer to a balanced market. Now, here are some, again, and I'm going to point these out because so many people think and are still talking about this market coming up into a crash. And these next 3 slides are going to talk to you about the differences between now and way back then. Number 1, well, this one is about forbearance that everybody thinks due to all these properties that have been in forbearance, all of them are going to flood the market. Well, you can see from last year in May to now, they have been steadily coming on the market, and now there's a much lower supply. So from our point of view, we don't see that making a big difference in a flood of homes coming on the market. Okay, now here's big differences from way back in 2005 and when our recession hit in 2008, 9, and 10. You can see that the cash out, home equity cash out, look at what people were doing heading into that. Well, that's not near the numbers. They're not even close to their, meaning the public, cashing out on refinancing, doing cash out doing cash out refinances on their homes to the extent they were then. Big indicator that there's not going to be the same type of crash. And then here's housing affordability. So you go back in 2005, 6, 7, where look at the affordability, right, was so low. And then we go into this where we have massive affordability. This is where all of those distressed homes were coming on the market. This was when homes were worth less month after month. Well, this being this low is not at all what's happening now. Again, another indicator that there is not going to be a crash like there was back then. And then finally, and this is where do we go from here, right? So if you are a buyer, this is a forecast showing that there is appreciation still coming your way year over year over year through the next 5 years. So while it may not be as big of appreciation as it was from last May to this May, it still is going to be appreciation. So that tells you that, again, and this is just a forecast, but it's based on all this data, that there isn't going to be where it's worth less than it was last year. So something to think about if you are waiting. And then this is by actual number over the next 5 years. They are saying the equity that you will gain in your home, the potential growth in household wealth over the next 5 years based solely on increased home equity. If you were to purchase a $350,000 home in January of this year, you would have $93,629 of equity over the next 5 years. So still very, very good. You didn't buy it January 2021, but what if you bought it right now? So there's the market update, where we are now and where we're going from here. I hope that helps you. I hope that gives you some good quality information, and give us a call if there's anything we can do to further help you.